Welcome everybody, it's the Market Sniper. Yes, that's right, coming at you on a Sunday. What am I going to talk to you about on the Market Sniper channel? Well, I'm going to talk to you about lies, damn lies, and statistics. That's right, I'm going to talk to you about the strength of the US economy. That's also correct. Why? Well, you had a very heavy data week last week, and you had retail sales as one of the core aspects that were being discussed last week. And what did we learn about retail sales? We learned that the US economy is super strong, and retail sales came in higher than expectations. Retail sales came in higher than expectations. In fact, there was an expectation of a minor contraction, 0.1 below, minus 0.1. And in the end, you came in at 0.3. 0.3 to the upside on retail sales. And this is seen, hey, so strong. Now, there's a couple of things why that is potentially useful, broadly speaking. And the reason why it's potentially useful is the Fed wants to keep rates higher for longer. So if they get to say, hey, you've never had it so good, everybody's spending, it's Christmas time and you're all bending the plastic, etc., then they don't have to cut rates so much because economy strong. Now, is the economy so strong? This is the big question we have to ask. So how would they potentially be lying to you? So so how would they be potentially lying to you, might ask? I mean, surely stats are stats, and we have to, they're facts, essentially. Well, here's how it works. If you skip along right now to @themarketsniper, the tweet feed, I've put a chart for you that shows two lines. So there's a black line and a blue line. And the black line shows US retail sales. And they are going up, generally up. Of course, there was the March 2020 dip, and then pump ever more with the QE that followed that, and shoo, all the way up and higher. So why did that happen? Oh, well, the retail sales number is looking rosy and it's climbing. Then there's a blue line that is just below that. And that blue line is different. It doesn't go up nearly as much, and it's been pretty flat and stagnant, and only now on the new numbers it's starting to creep back up. What is the blue line? The blue line is the black line divided by that same CPI that we are talking about, that is inflation, that of course spiked when they printed all that money post the events of March 2020 throughout the period of 2020 into 21, that ended up actually seeing a double digit, not quite in the States, actually, that's not true. I think nines, upper eights and nines in the States, but double digits in other countries in terms of, hey, things have gone up so strong, the economy is so strong, and the inflationary number. That means the fact that you're buying one item and that item cost $1 in 2020, and now that item costs $1.09. And in actual fact, in many instances, a lot more than that. You had a major run on second-hand cars. There were no cars because there were no chips, and all sorts of funny things were going on. And in actual fact, you had far bigger percentages in many instances on the various different items. But of course, we get to set which items get put in the basket. That is why you are sitting in a situation that on the Ronald Reagan numbers of stats done by Shadow Stats, you were in mid-teens when you didn't even get into double digits, in truth. You were in upper mid-teens. I think you might have hit 16, 17% at its worst point when the market was saying it was 9% on the CPI. So you see, inflation, rather than being a fact, is very dependent on what you choose to measure. If you choose to keep adjusting what you measure in terms of how it all works, hey, we'll put in stuff that are generally going down flat or not up so much. You've got CPIs. In fact, during the energy period, we were derating home cost of livings and energy. So inflation was going down, providing you didn't live in a home, need to rent a home and heat the home, or cook anything at the home, or put fuel in a car at one point. So there was all sorts of trickery and shenanigans that were going on to try manage the number. Managing the number is managing the narrative and getting you to believe what story, hey, inflation is going down and how much it's going down and we never made double digits and all of this stuff is very much a dirty little devious art in actual fact. So if you go and look at that tweet chart, we've put it in the link notes below, by the way. If for those of you that don't use Twitter, go have a look at it and you'll see the black line up and then the blue line not up so much at all and actually been kind of choppy and flat and only now just going up a teeny bit. And what I've highlighted in my overlay draws and writing in from the device with a pen on the screen on a note, what I've highlighted is if you take 1 point and you measure it to the top on the black line, you're getting a much steeper line. And I've done that in purple for you. And then in red, I've highlighted the same 2 time frames, how the line looks when you deflate it by the CPI rate. In other words, the consumer price inflation number. So what does that mean? Well, CPI clearly does a great deal of pulling the truth back down because nobody's buying more stuff if they're paying a whole bunch more. The fact that you're paying $1.30 for something you used to buy for $1 doesn't mean you're spending more. You're buying one item, the same item you must have, let's just call it toilet roll, a kind of a necessity, for example, that's now 30% more. You're not 30% more happy and out there spending because you got wealth effect. No, the whole dollar devaluation is seeing the fact that you have to buy certain basics cost more. And that's rather than being retail strength, it's cost of living going up. Cost of living going up doesn't point to retail strength now, does it? So that's one of the big lies that they do. Lies, damn lies and statistics, as we say. Now, the final thought I want to leave you on what's going to be a short update, just on a fundamental matter here from our stoop on the beautiful world there. I'm going to go for a walk by the lagoon. You should get out and do the same. Don't spend too much time on the screens. What I'm going to say here is, now imagine that the BLS number, that is the alleged inflation rate by the government-controlled Bureau of Labor Statistics and Consumer Price Information and everything else. Now imagine for a while that over a duration, where there's a compounding effect in interest, that BLS organization that is government controlled, where a government narrative is sought, a Federal Reserve owned by the banking cartel, and a government that is essentially elected or funded to be elected, supposedly by you, but funded by that same banking cartel, the political nominees, the usual you-know-whos that we dare not discuss. Imagine all of that is happening, and they are keeping that BLS number a little lower by intent than it should be. And they keep making adjustments in the shopping basket or undershooting certain assumptions that will always have a slightly lowering effect on that CPI. I dare you to think, none dare use the word that starts with con and spire and ends in a Y. No, but I dare you to think. Now, the compounding effect of just a small amount, you could even have a fraction of a percent that is being deflated. When you compound it over many months and over a year, actually turns into a big number. So if you take 1.01 and you put it to the 10th power or to the 30th power or the 100th power, you don't end up with 1 anymore. You end up with a far bigger number. And this is known as the compounding effect. Now, when you work it the other way and you undershoot, so if I ask you to take 0.99 and put it to the 100th power, you're not staying close to 1 anymore. Your number starts to dip away from 1. Again, that is a deflating compounding effect. So simple mathematics explained. Many of you might be very familiar with this, but just so that we're absolutely clear, the duration, that means time, the number of times you're compounding something, pushes the cost up. If you've ever bought a car on HP and you know what the actual price is, you know what interest you've been charged, and then you see the amount you're actually paying, that 8% finance charge or 3% finance charge, depends where you are. Sometimes it sees you paying 35% more for the car, 50% more for the car over the term. This is compounding effect. This is duration. This is how the banking extracting cartel of compound tertiary interest actually functions and helps make them rich and you poor and a perpetual slave to them, which is why we say get debt out your life unless you're the bank, in which case proliferate it and make many other people poor, and you build wealth and you keep them running on a treadmill and you own their stuff, because if they don't pay, you repo. That's right. So anyway, back to the stats. The third question I'm asking of you is, once you deflate by the alleged CPI according to government stats and government bureaus, you actually don't have such a strong retail sales number at all, although it's picked up, they claim, right now. And if you count things in the retail stats that are absolute necessities, that have particularly gone up in price, you can actually make the consumer look buoyant. Hey, if fuel's shot up and we start counting everything you're putting into your car and all of that, suddenly your petrol budget go, you've never had it so good. Look how much you're spending. So again, this is many ways just to illustrate the same point. And as you put that little fractional undershoot in, or that little number cheat, but you compound and you do it every time by a little amount all the time, you end up with a substantially different line. So my supposition to you when you look at that tweet and question is, A, you've got the black line, that is the lie. B, we've got the adjusted down black line, that is now a blue line, and that is the government orientated adjustment to the retail sales, which I say to you is also probably a lie, and it only needs to be a tiny lie, because once it's compounded many enough times, it will actually have a significant effect, as I've already illustrated. Remember the man who stole all the rounding errors in insurance and banks for all the fractions of cents and had them all accumulated and sent to his bank account, who was fast becoming a very, very, very rich man on micro deposits that were coming in every day into his bank account, until eventually the bank that was receiving these deposits said, this is something funny going on, you should look into this, and then he was caught. So how small numbers turn into big numbers, duration, compounding, tertiary extraction, very, very good. Mathematics, so it is, Mathematics 101. So, in actual fact, you're being told that the consumers never had it so good, and retail is strong and buoyant. Of course, we're going into Christmas month as well, which is typical of spending, but they would have had that as a seasonality. But again, the adjustment might not be as big as it should for that particular seasonality. So you're sitting at home and you're saying, geez, I'm finding it tough. Clearly, I'm in the wrong business, you know. Somebody's making big ammo somewhere. Hey, it's just me. I should change job. I should change careers. But my mates aren't doing that great either. They're saying, you know, I've got so little disposable left over at the end of the month. I don't know what to do. You guys are all losers. You guys are all losers. You're all in the wrong business, and you're not executing properly. You useless schmucks, man. Get a life. Work hard. But, geez, I'm working like 60, 70 hours a week. Yeah, but you're doing the wrong thing, man. You know, you're digging holes and filling holes. Where's that get you to? You know, so this is the sensation many people are feeling. They're getting gaslit in essence. So even people that are doing reasonably well are finding they're getting ahead, but they're not getting quite ahead as much as they thought. And they still end up, you know, they're not saving quite as much as they thought. And they look at their discipline and they ask their wives questions. What have you done? And did you buy this? And all of this thing. And the wives are asking the husband, have you gone and bought another motorcycle? Shh, keep that one stum, please. Anyway, so all of that's happening. So that's how you're feeling right now. And you're thinking, the other half are living better than me. Well, maybe the other half ain't living better than you. They're sitting on the other half side and thinking that half is doing better than me, because I'm also finding it kind of tough and kind of hard to get on. And this is the big. Now, there are, without doubt, certain industries that are absolutely flying, like the military-industrial complex, of course. The military-industrial complex that were recently visited by Zelensky and all the CEOs, you know, no doubt they're planning a good old binge. And, you know, government hiring, that's the other thing. Unemployment stats, friends, you know, coming in better than expected. Who's the biggest recruiters? Pharma, which is a military-industrial complex, in case you weren't aware, and, you guessed it, government. But hang on, government recruitment is not beneficial to the economy. The bigger government gets, they are a net take. In other words, they need more taxes or they need to raise more debt to pay those people. That isn't productive. They're in the service industry, public sector service industry for you. The people who make money are the private industry, and the private industry is getting crowded out and smaller, and all the job creation is now going on in the government. That means the government is crowding out private, from a point of hogging the money. Yes, tax and debt raising, all going to government. B, hiring the staff, the major recruiters. So the private businesses are not on a hiring binge, taking everybody. So you're getting these better unemployment numbers on a burgeoning, growing government that the smaller, tighter, squeezed private sector now have to pay tax revenues to feed and pay salaries to all these new, on top of an already big government spending beach. So we've gone from retail sales, CPI adjustment. So let's just recap before I sign off. We've gone from retail sales, CPI adjustment, and what if the CPI is understating? What truly would that retail be in real terms? You think your retail inflation rate right now is 2.4% or something like that they're telling you? Okay, muddle on if you think that's true. Don't forget that 2.4 is on a much higher number than it once was after the events of March 2020. And then you sit here and you find out the economy is hiring, but all those hirees are going into a massive healthcare that grabbed healthcare by the throat, pharmaceutical industrial complex, and a combination of governments. So how do you feel about that? Those numbers? Unemployment, not so bad, but for the reasons I've just described. Retail sales, super strong. But then the question I ask you is in and around the CPI deflation version of the retail sales and the CPI number that is being utilized for that. So my hypothesis continues to remain that 2024 will be an exceedingly difficult year for the average retail person in the American economy, the European economy, and in actual fact, it's quite likely that some macroeconomic events befall us, potentially quite early in the year, but during the course of 2024, I would suggest, and that these will be debt-related, banking-related, and potentially currency-related. So when you have a macro government debt problem, you also tend to have a currency-related problem. And you may see certain nation-states' currencies getting disorderly. These could be emerging markets. We are, even though the rand's getting a little bit of strength right now, we are expecting a major bottom on that and a reversal strongly to the upside against major tier one currencies. So you could see some strength, some weakness coming on the rand and other countries like it. And also, who knows what will happen on Japan? It's been strong now on the yen for a bit. The yen's been tiny bit pullback. Dollar's been a little bit weak. But what will happen when we reset into the new year? So we could get currency malaise. And remember this, they don't want you focused on the financial system. So there will be geopolitical events and reasons that will occur to distract you from this. This could be an enhanced war going into Lebanon and other things. By the way, in our links on our video below, they may not work at the moment. We've had some advanced features disabled. So copy the links and paste them in your browser, or go to themarketsniper.com to see our links. So I get a lot of questions in the comments. Who do you trade with? What brokers do you use? Crypto? Where do you buy gold? Who's trustworthy? Who'll deliver it? How do you accumulate if you haven't got enough for a significant amount of gold? That's the Bullion Vault links. They're all below. You can copy them and paste them in the browser, but they're not hot linked anymore, because we had a certain amount of community hits that have removed that as an advanced feature. So now we're going to be a very good boy, and that's about as political as I'll ever get, questioning essentially in this video the stats that you are getting on CPI and the subsequent effect it would have on retail prices, and highlighting that higher expenditure being forced to pay on absolute necessities is not retail strength because a bigger number is coming out. It is disposable income weakness in actual fact, as less is hanging around to pay. And then I ask you, what do you think from your experience your personal inflation rate is? Then part two of the video, Employment, you've never had it so good. Again, unemployment is undershooting and employment is good. The biggest employers, primarily swinging everything so hot and positive, pharmaceutical industrial complex and the government itself, so government employees. Do you think that is consistent with a growing economy, specifically in the private side, because that's where all the tax gets paid, and that is where all the innovation takes place, not obviously in government? Give me your answers below. And remember to share and like, even mentioning the pharmaceuticals as a corporation straight away, deregs, and algo doesn't like, particularly someone with a profile like us, mentioning those things. So we need your help to get these kind of questions out to the average people. We need a great awakening, guys. It's 2024 and big stuff is coming down the tube. We need a great awakening. You don't want to keep us as your secret, little dirty secret that you watch. We need you to help us wake your mates up. That's what we need. And the algorithm ain't going to be doing it for us. As I'm saying, some advanced features on this channel have been disabled. So we need your help. Share it, hit the like button, and tell us your comment. What is your CPI number for you personally? What's your guess? Year on year on stuff that you use regularly. What are you seeing? And secondly, do you think hiring by government is a productive for GDP growth, or is it going to accelerate the need for debt issuance and tax raises to pay all the salaries to these people? I know what I think. I'm interested in your thoughts. We'll catch you again. First of all, a massive thanks before I sign off for all the support you have given us throughout the year on the Market Sniper. Despite all their efforts, we continue to grow, both on subscribers and engagement from you guys. We truly appreciate it. We look forward to taking you into 2024. We will, however, say that 2024 is likely to have major macroeconomic events, I suspect, take place during the course of 2024. Everybody says that they've been pushing the can. Yes, well, you did have March 2020. And you don't tend to get away from those for too long when they're so big, especially with the cures that they brought. So you tend to get almost assured regular bleed outs, being leveraged and excessively in the markets, whether it's equities, other things, or even cryptos. For some of you that might also be subscribed to our Crypto Sniper channel, don't forget the Crypto Sniper, can do you real damage when you get sudden event risk. And there is plenty of ready to go, ready to collapse crises. It's just going to become a question of when are they done holding them up and they want to pull things down. And you can expect geopolitical events to be synchronized to coincide with that during that time. That is our take. But despite all of this, it's a good life. It's a beautiful world. Get out there, get sun on your back, get in the sea, get in the water, live well, get debt out of your life. Be sensible and responsible in terms of how you choose to spend. Do things that make you independent and self-reliant from government-based services, which is policing, waste refuse removal, electricity, water, you name it. The more self-reliant you are, the less points of pain they have to pull upon you. Also, make sure you don't overly feed the beast with your taxation, because you're paying for a consultant on transgender related issues, mental health, etc., in the government for some peanut corporations' right to hire certain profile types, woke agenda, everything else that comes from BlackRock and everybody else. Okay, that's it. We don't want to be doing too much of that. A quick advice, and thank you. Have a great Christmas. Enjoy time with the family, and give us those likes and shares. We appreciate them, and we'll continue to question the fundamentals of the healthy economy narrative going into Christmas. They need you to feel healthy so that you go spend a bit more. Everybody's feeling good. They need it not to become mass psychosis that everyone's depressed. They want you to keep building debt for the big pull down, and for the potential rate spikes that could follow when debt devalues. And debt will devalue. There's too much of it about, and that is an associated interest rate hike. That is why they keep establishing alibi for, hey, rates might not go down as much as you think. This equity market's overpricing a major turn in rates to the downside, and there could be a lot of disappointment to come. But maybe you'll get first a crisis and a little bit of cuts, and then a sudden push to the upside when the debt market rolls over. Okay, till next time, I'll catch you then. Thanks for watching.